Here we go, here we go, here we go, here we go. It is Markets in the Morning. Let's go. Hey, what's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning. Today is Wednesday, March 6th, 2024. This is Markets in the Morning, where we take a look at the price action of the cryptocurrency market, including the Bitcoin price chart, which is at 66,900. Take a look over there at the altcoin market, see what's going on, and then take a peek over there at the United States stock market, which is set to open up in the next 3 minutes. Quite a dramatic sell-off yesterday. Got a little bit of a recovery going on this morning, which is nice. Take a peek over there at precious metals such as gold, which is knocking on the all-time high door, and the United States Dollar Currency Index, or the DXY. So this morning, we will dive into all the stuff that we do. I have a couple things I actually want to talk about. We'll kind of go into depth with it, with Bitcoin's big dramatic event where it spent about 50 seconds in an all-time high yesterday, right here live on the stream. And then, of course, if you paid attention to it later in the day, the price fell. And then we actually saw a liquidation event take place throughout the market. Liquidation was over $1 billion in the crypto market, both longs and shorts, getting absolutely margin called throughout all of that. But, you know, as we are now back up in here, of course, everybody's modeling 2020 and 2016 for what's to come next. We're going to take a look at a lot of that stuff here live in this stream. And then this week, I'll have a video out for it. So I'm going to be working on that all day today. The question is whether or not it'll get out today is the $1 million question when it pertains to the behavior of the altcoin market from here on out and Bitcoin's price action from here on out. So I'm going to show things, you know, since we're all looking back to the past, we're all looking at 2016, we're all looking at 2020 to say, this is how it's all going to play out. We'll look at that, we'll see the similarities, we'll see the differences, and try to solve the puzzle from there. But as we get ready to kick off the day, as the markets get ready to open over there in the United States stock market, you got Bitcoin over here at 66,700. Again, dramatic sell-off that took place yesterday, but a recovery did take place. Ethereum even did too. Ethereum went and broke back down below the 702. Now back above the 702. I'll put these fibs on here just because there you go. Now you can see it. Broke back down, then broke back up. Total volatility all throughout there. Altcoin market, same story. Lots of volatility happening in there on that liquidation that took place right in there. Of course, we all know this has been an accumulation schematic that we've all been grinding through for the last year and a half. Finally, we get through escape. We get into phase E. $1 million question is, will there be escape velocity to head out of here? Or is something else at play as we are up here on Bitcoin currently right now? We'll move over to the stock market here. Now, we were looking at this. Okay, so yeah, altcoin market is up today. Altcoin market recovery. You can see leaders this morning are Uniswap, 0x, Starknet, Ethereum, HBAR, BNB, Ethereum Classic, New Economy movement as the day gets kicked off. One thing here, right? So like volatility is showing up in here, and this is one thing we talked about a lot going through all of this right in here is that there could be volatility in here. And an example I've shown with that is right in here. This is that kind of the exact same style thing that we've been doing. This is your sign of strength phase on top of your entire accumulation schematic. You escape, and then just ridiculous amounts of volatility can take place right in here. We're kind of in that moment. We saw a little flash of it happen there yesterday. But I just realized before we get going any further, because here I am jumping right into it. If you don't know this, we're going to talk about a lot of good data in here, but we also try to keep it light, tight, and bright, and pretty fun over here on Wednesdays for all the people who are tuning in for the very first time. So, happy Wednesday, everybody.
It is Wednesday, my
Sorry, I can't deny the frog. Yesterday, you guys got teased so much that it was going to happen right there live in the stream, and then it just got rugged. It just got rugged. But happy Wednesday, everybody. We will play that multiple times throughout the day. So just kind of be prepared for that. Anyway, volatility through here, checking to see if we can get some exit velocity. There could be a lot of volatility here in these moments. Of course, XRP, things we've been looking for to continue holding, even during the liquidation event. It goes back and slams it again, still above 60 cents. But holy moly, come on. Again, just those retracement levels, and we didn't catch this live when it was happening. But again, it's one of those things when looking at those retracements, where does it hit? Just pinpoint nails the 702 retracement of this particular range, and then wham, right back down to these lows. Things still are okay. We're still holding above 60 cents in here. All daily closers are still continuing to hold up on here. But man, come on, stop teasing already. As for gold, boy, this is the thing that definitely gets me uncomfortable when looking at markets. It's right there near the all-time high. So with gold futures, it's only $5 below the all-time high. Looking over there at actual spot price in here, spot price is actually only $9 below the all-time high there for gold. Historically, these are warning signs for equity markets when things like this are happening. So, of course, it's a little concerning. As for the stock market definitely having a better day than yesterday. The Dow closed down 400 points yesterday, at one point down more than 500, now up 200 to kick the day off. The Nasdaq's up 200, which was down about 3 yesterday at one point. Can't recall exactly what it was yesterday at the closing, but it was about 200, I believe. Leaders of the day as we kick off the morning: Coinbase, Roblox, ARK. Those are the two we were really talking about wanting to see get moving. Things like Roblox and ARK for expansion happening over here in the Russell 2000 to see the breadth open up throughout the United States stock market rather than this being such an isolated event. But Coinbase is doing well. Meta, Nvidia, Amazon. Losers this morning are Ford, Tesla, and Apple. Yields, long duration yields slightly down to kick off the morning, but metals are obviously having a killer day. As for the DXY, or the US dollar currency index, down this morning. Here we go. Is this the trajectory finally starting to kick in? We'll end up seeing that in here. But what I really want to do today is talk a whole lot about just Bitcoin, the big event, where we've gotten to, and how the picture looks in general. And so I've been building all this stuff over here for a video to put out. And this is very similar to the things we talked about last Friday. But, right now, obviously, the modeling that everybody is doing currently right now is to look at it through the lens of 2016, through the lens of 2020, and to see where it's going to end up going from here. So this is going to be what we're going to kind of talk about. I don't know how much of the monologue this is going to take, and it'll be kind of loosey-goosey, but once a video gets put out, of course, it's all chopped up and edited, and it flows a whole lot more smoothly. But anyway, you get back to the all-time high. What are we all looking for, right? We're all looking for it to actually keep going and to continue breaking out and to go much further, right? And things that we look for in these environments is, what's going to happen next with the altcoin market beyond that point, right? So let's see if I can shift that. There we go. Altcoin market. There we go. Altcoin market gets back up into retracement levels in these areas, right? What are we at? We're at like the 618 retracement level here for others. I'm going to scoot this down a little bit more. That's not exactly accurate. There we go. Right. So, you get back up here to the all-time high, whereas others battling around, and it's battling around here, right around the 618 retracement level, kind of wobbling all around throughout that area right in there. So we head over here to 2023 and 2024. We say, well, where are we battling at around right now? Hey, things are very similar. Where you at? You're right there near that 618 retracement level, just like we saw back in 2020. So those things are all matching up very nicely. Those things look good. And we say, all right, cool. You got all those elements aligned in there. And then we move on to the bigger picture, right? And so I say, okay, well, that's the moment where the exit velocity ended up taking place for the cryptocurrency market. Like, this is all still just retracement action happening in here, but exit velocity takes place from here, right? This is where everything is able to rampage, everything's able to get going, and we continue to rock. And this is where all the true excitement in the cryptocurrency market happens, right? Percentage wise, we always know that most of the percentages are made for coming from the lows. Just that's the way it is in markets, if you're not measuring percentages, if you're buying things after they've already broken up 300 or 400%, you're just not doing the math on it. Most of the gains are made by being able to grab things at their absolute lows and the depths of despair, and then they get their way back up. This is where most percentages are made. But the question is, will we get exit velocity and, triple that, right? Triple what it's already done. And that this is where the models all differentiate, and the conditions aren't the same. And so what I'm going to do here, I'm going to put total 2 on here. Total 2. Think you're that one? Yeah. Okay, we're going to take others off. Right, so you get here, where's total 2 back at? Total 2 is back at a 50% retracement at this point. And maybe it's a little bit more. Let's get it just right. All right, total 2 is at about a 50% retracement at this point. Where are we at here? Right there, there's 50%, right? Similar. Go back to, we're using Coinbase. Let's use a different one. Let's use the BLX. We don't have the data to go back further than that. Anyway. So the thing that, hold on, I'm going to show you this. The thing that we're all looking for, obviously, here is whether or not we're going to kick off into a major alt season at this point, right? I mean, I think that's the $1,000,000 question everybody has from this point. And when we look to 2020 and when we look to 2016, there was 2 kind of variants of how it ended up playing out in here. And so everybody's looking at that, and like that's the golden rule of what we're all looking at in here for the bulls, right? Is like, do you have this, right? One example is, you get a massive break here in Bitcoin, then it takes, right? Bitcoin doubles in price, then the altcoin market follows later. Then the other one, of course, is Bitcoin waddles around in here. Like this is the moment where it hits the all-time high right in here, right? Boom, all-time high gets hit, big whack down. And then we just kind of start taking off as Bitcoin's still trying to grind through the all-time high. So these are the 2 scenarios everybody's looking at, right? Are we going to end up having a situation where Bitcoin breaks out, it doubles in price, it goes to 40. In 2020, it went to 40K before things got really euphoric in the altcoin market. Or right in here, this is where we get back to the all-time high and everything broke out, altcoins broke out, and then it went completely nuts. And so I'm not blind to these things, right? Like I'm fully aware of them, and I'm thinking to myself, like, okay, like these are the models, these are the things that we look at and think, okay, can we do that? And then I look around and I say, okay, we have unbelievable similarities, as we just showed the altcoin market, like the retracement levels of where they're at for where Bitcoin is at. It's all perfectly right on cue. It's right where it should be. The market is actually acting completely appropriate. It's right there. And then I say, okay, great. Well, we have like these conditions, or they're like identical to 2020. They're identical to 2016 in regards to price action, where the altcoin market should be at this particular time. And then we look to, what else was going on there. And then you can see other elements that are actually a little bit different in here. And, the big story has been Bitcoin, right? But things that I've talked about, I put out a newsletter back in October, on October 30th, going through a lot of the high development discussions, right, about the altcoins, right? This is a big element here that is very different from what's going on in the market right now than what was going on back then. And to kind of get to kind of visually see this, I have way too much on here. Okay, we're gonna get rid of that. We're gonna get rid of that. No, there we go. And then you off others .d new scale. There we go. Right. So in the run back up to the all-time high, what do you see very obvious in here? you clearly see that the dominance of the altcoins gets smashed. It gets absolutely annihilated and hammered here as Bitcoin is running back up to that all-time high. These two dynamics that were happening here in the market, where it goes from the lows all the way back straight to the highs, you see the dynamic of the altcoin market getting pummeled here as Bitcoin goes roaring back up. I've shown this dynamic in an easy to see visual right in here, right? You could see others down here in 2020 is absolutely only getting wrecked by Bitcoin. It's up only 10% in here, whereas Bitcoin does a big 64% rally. Then we move over here to 2023 and 2024, and others has rallied the same, if not more, than Bitcoin has during the entire move back up. So you see the dynamic of what happens in here, that this gets pummeled as Bitcoin goes back to the all-time high. That dynamic was also true when Bitcoin goes back to its all-time high, which is right here back in 2016. So I say, okay, well, we have the price action, we have the everything's at the same levels that it should be, but is the dynamic the same? This is one of those things that are different, right? Like this, we get pummeled here as Bitcoin is the showstopper. We get pummeled here as Bitcoin is the showstopper. And that didn't happen this time. During the whole rally, the dominance of others actually grew. So the altcoin market actually rose in that moment, on average, outpacing Bitcoin during the whole rally. So that's different, right? So we're looking towards modeling of 2016. We're looking towards modeling of 2020. But then there's like this big dynamic that didn't happen, right? This dynamic where the altcoins get pummeled in here as Bitcoin goes back to its all-time high, right? Whereas it didn't happen, right? So there's something different there, and acknowledging that, right? I mean, again, still you look at everything. You look at 2020, you look at 2016, how the price action is, of where the altcoin market is at, of where Bitcoin's price is at. Those things all look good, but it didn't happen, right? Like on October 30th, I wrote a newsletter talking about high development activity coins, and that those probably are going to matter because they mattered in 2021. And of that list, 14 out of 20 have outpaced Bitcoin during this entire run. You look over at the top 20 by market cap, 7 have outpaced Bitcoin during the entire run. What's also interesting about those 7 from the top 20 by market cap, 5 of them are in the high development activity list. The other 2 are Doge and SHIB, right? Meme coins. So you have meme coins, and then you have high development activity. So interesting dynamic, and that's just different, right? If we're looking to 2016, if we're looking to 2020 to say, hey, we're doing the same thing, those dynamics of the market are different in that if you knew what to look for, you wrote it up with Bitcoin at the same percentages for the last 6 months. There's no difference of being in Bitcoin or in being in higher development activity level coins. So that's a fascinating thing that I'm just wrapping my head around, of like, why would it happen if we're going into a massive bull run? Why would the market not get pummeled like this and like the liquidity all drain specifically into Bitcoin? It just didn't happen. So it's interesting to think about. The other things to think about, of course, is just the macro picture, right? And we've talked all about these things, and this is what is so different. And we'll just talk about this, but I'll do a better job when I put a video together on it. Is that each of Bitcoin's bull runs, whether it is 2013, whether it is 2017 or 2021, these dynamics were all the same for all of them. Gold crashing, Russell 2000 breaking out, Dow Jones Industrial Average breaking out, federal funds rates at or near zero. That is the same consistent thing that has happened for each one of these breakouts to actually take place in here. That is right here. You're looking at it for 2020. So we look to it and we say, hey, all right, this is 2020. If we're going to use the 2020 model to say Bitcoin's going to go flying off into the sunset, Well, here's what we would be looking for, right? You'd be looking for, liquidity just flowing and everybody partying and everything is great and everybody's like, F gold, right? Who cares about gold? Boomer coin. We're high risk taking. Let's keep on going. Let's send this thing off into la la land, right? We all get these breaks happening at the same time of gold crumbling, Russell, Dow, Fed funds, zero. It's going to take me a minute here, but we're going to move back and we'll look back here into 2000 and come on. And where is the Fed funds rate? Here you are. Is this you? Yes. The Fed funds rate, as we go back to the high, is at 0.25%, right? We're just starting. We're coming out of zero, and we've been in essentially zero for years on end, right? So we're coming off of an extremely loose credit condition behavior once we actually get back in here. Make all these things better. This is the hard part about doing these on these live because you can't. It's not like with editing where I can spend 20 minutes, like when I'm recording a video, I can spend 20 minutes editing this thing to show you this. Oh my goodness, come on. Here we go. There's the breakout. I don't know if this is going to work live, guys. This may just have to be a video. It's way too much because now I can't even have my markers happening in here. But anyway, so what do we do here, right? We get a breakout in the Russell. We get a breakout in the Dow. We have a very low federal funds rate that's sitting at 0.25%. And you see gold cracking down and you see Bitcoin breaking up. And then at the same time, we see others dominance getting pummeled at the exact same time as all this is happening, right? Four different elements, right? Very low federal funds rate and loose credit financial conditions, gold getting wrecked, stock market indexes in breakout with extreme expansion, and others getting pummeled, right? That's also exactly what happened in 2016. So we're looking at these models and we're saying, all right, this is either 2016 with the altcoin market where we're rallying around up in here and we're getting ready to go, or it's like over here in 2020 where the altcoin market is going to rally around and we're going to end up going. But things that we notice that are different is that you would expect that Bitcoin would have been the show-stopping event to head back to the highs and the dominance would have fallen. And that as it goes back to the highs, that the dominance would have fallen. However, it didn't. Right? The dominance has risen of the altcoins. The other things we'd be looking for is say, all right, do we have low Fed funds rate? Do you have gold breaking down? And do you have expansion happening in the market? And we have all these things that are polar opposite of 2020 and 2016. Right? What are we looking for? We are looking for a breaking down gold. There's gold right there. It's breaking up. In 2020 and in 2016, for the expansion to happen, gold was breaking down, right? What was happening with expansion in the market? It was breaking up. The Russell still is 50% below its high. It's not in expansion, right? The Fed funds rate, what we saw in 2016 and in 2020 is that 0 or 0.25%. Instead, we're at the peak of an actual hiking cycle that is happening in here. We're in a pause. Now, historically, pauses are good, right? We've talked about that a tremendous amount, that pauses tend to be good. It's the cutting cycle that is terrible. A big misconception out there on crypto Twitter and in YouTube land is that cuts are super bullish. They are not. What the misconception is that zero rates and loose financial conditions are bullish, right? Historically, they are. And we just saw that in 2016 and 2020. But what isn't super bullish is the actual cutting cycle that happens in here. Because what happens when we go through the actual cutting cycle, who's the big winner? We go through a long pause, right? We go through cutting cycle, stock indexes crash, Bitcoin crashes, and we actually end up seeing gold rise, and we see gold be strong, right? What are we seeing right now? We're getting like near the end, right? Everybody's wondering, when is the Fed going to start cutting? And yet gold is really strong. The Russell is not in a new all-time high. Fed funds is at 5.25. Unlike what we see, dominance did not behave as we get back up in here, right? It did not fall. This is what everybody was looking for. Everybody was looking for this big rally to happen in Bitcoin and for the altcoins to get pummeled during that. It didn't happen. It didn't happen. So it's not like, so when I look back to 2016 and I look back to 2020, I am not blind, right? I am not blind by the fact that the total market cap of the altcoin market sits exactly where it should for us to get exit velocity. I'm not blind that Bitcoin's gotten all the way up here with those elements happening at the same time. And the other thing, during the entire bear, it was very difficult for most people to wrap their head around that the peak of the market was back over here. And that it's also very hard for people to wrap their head around that this was actually our whole cycle. The cycle was only 3 years and 4 months or less back in 2018 through 2021. That this is the full cycle. And technically speaking, enough time has elapsed for a new cycle, right? We're there. It's not like it's off. It's like totally right on point, right? So like you've got that there at the appropriate time. You have the altcoin market at the location where it should be at the appropriate time. But when we look to like all the other elements of like, how did the dominance of the altcoin market behave during this? It behaved the polar opposite. You ask, how's the Fed funds? How are the credit conditions out there right now for exit velocity? Oh, polar opposite. And then you say, well, okay, well, how is the equity markets doing? They're not expanding. It's extremely isolated and consolidated, unlike 2016 and 2020. And how's gold? And it's like, oh, gold's trying to break out. Like, oh, okay. Those are all the exact polar opposite things that happen in order to get an actual break and to go completely nuts. Right? Things I've been looking for obviously have been a retrace, right? Just saying, hey, look, all these things, all these conditions, they're screaming at me, right? We are behaving like a retrace. And this thing obviously has gotten completely carried away all the way back to the highs. It's been shocking in a wonderful way. It's not a bad thing for it to go higher. It means there's more money and all that stuff can rotate around. But like we go back, and if you kind of live in this moment of when we did retrace in here, what was going on in here, right? We were in a pause in the federal funds rate, right? We had just got done with this is the green one right here. We had just gotten done with a very long hiking cycle. We enter into a pause and we go into a very big retracement happening in here. The Fed finally starts cutting, and that's the story of Bitcoin during the cutting cycle. And so again, anybody thinking to themselves, hey, we haven't even started cutting, just imagine how bullish it's going to be when we start cutting. This is the only reference point you have for Bitcoin's price behavior during a cut, is where it is cutting and Bitcoin's losing everything. We had just rallied off the lows in a big way in a pause cycle. And then during the cut, we fall all the way back down. It's not until we actually get to 0% that we actually are able to escape. So the actual cut itself was not bullish. It was because there were economic situations going on, right? At that time, what are we having? We're having the overnight lending market, right? With the banks is having issues, and they're doing not QE. And when we go back and you look really structurally at this whole behavior in here for Bitcoin in that time, let's move over to here and just kind of structurally look at it and the behavior of it. And one thing we talked about a lot during all of this is I have an emotional log. I've read this to you guys on stream. I've made videos of it. We've talked about it many times. Haven't gone through capitulations before. So when we went through all of this stuff, I could just sit here and really just share what that stuff was like. Because what ends up happening is when we're down in the depths of despair, everybody is mad. Everybody is angry, sad, depressed, everything like that. Then we get back up and you get into euphoria. Going through something like this before, I actually have the whole record of it all going through right in here. And I have all of it. And one thing we talked about a whole lot is that when we got back through this phase right in here, this is where it felt like no one was standing on my chest anymore. We go through a whole capitulation in 2018. It's horrid. I've got all the logs of it. I'm super mad. I'm buying the market, but also using a lot of self-deprecating words about myself. Like I'm feeling stupid. I'm feeling dumb. I hate myself. What's wrong with me? Why am I doing this? And then when we get the break back up in here, I'm not emotional about it. I'm like, nothing. You know, I don't feel anything. Every time this happens, the price turns back over. It's whatever. And then once you got through here, you can just read it in there and read it in my log. And I'm like, I don't feel like anybody's standing on my chest anymore. I don't feel like there's this heavy weight sitting on top of me anymore. And that, things may feel a little bit better. And we just kind of break out, right? And then we get up in here and we waddle around in here. And then, it's still exciting. It's still good. But then we get in here and then it gets euphoric. It gets super wild and super euphoric. And things you can notice about, like just in the structure of the retracement that ends up happening in here, is how it all comes to a conclusion, right? Like it gets off the lows, right? 2 bounces right in here before a bigger break, couple of bounces, and then a very clear 5-wave structure in here that ends up happening. With a 342% rise off the lows, right? 342. Consolidation, a breakout, don't trust it, don't believe in it. Then finally the weight of the world is off my chest. Head over here. Breaks out, consolidation. We get above 31K. And essentially at that point in time, no more 12K discussions happen anymore, right? The weight of the world is lifted off of everybody's shoulders at this point once we get through here. And we talked all about that throughout here. Like, look, once you get through here, nobody's going to be talking about 12K anymore. It's going to be over. The 12K discussions are going to be done, and we're going to get out, right? Instead of getting just to retraces, we go all the way. And look how we end. We do have a 5-wave structure that shows up in here just as we have happen in here, right? 1, 2, 3, 4, 5. 342%. Really, all of it acting 347%, right? And there's 5 waves to go for the conclusion. And so I say to myself, all right, well, is this just a glorified retrace, right? Is the 50-second all-time high that happened yesterday, was that a liquidity grab, right? That's why we had so much margin call yesterday happen, so much leverage liquidations, not only to the long side. You saw a lot of the liquidations also happen to the short side. So mostly long, but a lot of short sellers got liquidated yesterday too in that 50-second time period. And then I say, all right, well, so we're all looking to 2020. We're all looking to 2016. There's a lot of similarities on how we got back to where we are currently right now. Are there similarities to the economic market conditions of what were going on here? Like right when we got here, what was happening in the market, right? Right, like right, and I'm gonna hide these things. Like what was going on right here when this happened? We had been in a pause period of the federal funds rate. We're in the middle of a hiking cycle, and we had just gotten to a long pause, right? We get here, and then like a month later, the Fed starts cutting, and the cut starts and the cut begins. A little similar to what we have right now, right? We're not in these zero bound Fed funds rates for a breakout into an all-time high. were very similar to Fed funds rates being paused, and we just did a big, massive rally. There's a five ending waves. Right. The Russell's not breaking out into a new high, right? We're not in expansion in the United States stock market during that time, which we know we're not in expansion right now. We look over here, it's just same story, right? We're just way down here, way down here. And what's happening with gold, right? Gold is marching upwards. Gold is in an uptrend, right? Unlike when we actually get the velocity to be able to go for the big breakout, gold is breaking down, right? So polar opposite, right? Instead, in these environments right in here, gold is breaking up. What's gold doing? It's breaking up. It's not acting like that environment. It's not acting like when Bitcoin breaks out and it's going up where gold is getting hammered, right? Here's gold getting absolutely slaughtered in here and continuing to remain in a bear market as Bitcoin's going with the equity markets. So those things are all different. And those are the things that make me scratch my head. Like the easiest thing to do right here is to just say, hey, look how much time has elapsed. Like it's freaking perfect, right? Like, and it matches everything that I say in regards to the block reward halving is nonsense. Not sorry. It's nonsense. It doesn't matter. It's totally a made up fictional narrative. And enough time has elapsed for us to actually be in an environment where something can happen, right? This is super simple, super basic. And then we just look back to 2016. We looked back to 2020 and we use those models and we say, dude, we're right there. Let us go. But there's something else at play here that's odd. And none of the other conditions when we're not looking at it from just this model. And don't think for half a second, I'm not cheering for this. Let's go. If that happens in 3 months from right now, we're all going to be sipping iced teas on a beach, hanging out in a hammock. Don't think I'm not cheering for it. But there's just a lot of stuff out there that is not the same. And so when I say like, when we looked at 2020, we looked at 2016 modeling, I would want to see all the other conditions being equivalent, and they're just not. Not with gold, not with the Fed funds rate, not with expansion in the United States stock market, which is what we did have here to get the exit velocity to come out. And that structure we just printed and the percentages we just did, they're identical to what we did in an actual retrace here, but it's just glorified, right? I hope it's not. I don't want it to be, but it's something to think about. And so right now, like it's like, of course, I want to like from a beneficial standpoint on my YouTube channel, to come on here and to just be a raging bull and make surge incoming for Bitcoin, massive explosions around the corner, right? Gets a lot of clicks, gets a lot of views, right? All that stuff is very nice. But I refrain from doing it due to those weird things that we see over there that something doesn't smell right. And here is the thing that is beneficial that could make it all wrong, right? When it comes to gold, when it comes to the Fed funds rate, when it comes to that, although I can't lean on it, right? And these are things that I've pondered too. I've written a newsletter out there and it's called Money or, Bitcoin, Money or Tech, right? What does it behave with? It's a tech. Like, there's a lot of narratives. There's a lot of storytelling. There's a lot of ultrasound, volcano magic of block reward having perfectness that we should all marry it and not even have spouses because Bitcoin is all that we need. Like, there's a lot of narratives that go along with it. But when you really look deep down under it, what is it behaving with? It's behaving with tech, which is also behaving with the United States stock market, right? The market is very isolated in the United States stock market, right? It's like super consolidated. And like, where is it consolidated? Tech, right? Tech is in a bubble, right? That is different from the whole United States stock market that isn't expanding. It's just tech that is totally running. And so like you have that where you could say, well, is that the influential factor, right? Hopefully, dear God, please. Hopefully. otherwise, everything else is totally different from 2016 and 2020. And so we look to those models and say, hey, let's go. But we have all the same conditions and now even equal percentages of a big, massive, giant retrace that just happened for Bitcoin. That was a full retracement. Same percentages, same structural behavior. You can go down, count your waves, do all your waves in here. They're the same thing for the whole thing. And then, Fed funds rate, right? Gold behavior, equity behavior, all identical. And so you have all these backdrop elements that are identical to here. It obviously just looks different, right? It looks different because of how high it's gotten, right? So this retracement obviously gets to what? 618 to a 702 Fibonacci retracement. This one, if it's only a retrace, gets all the way up. Fingers crossed, that's not what it is. But you have all the economic conditions saying, hey, everything that did happen here, everything that happened here isn't happening here. Now you could see that by the down trajectory of gold, in which the trajectory is now up. You could see that in the Russell, which is breaking out, in which it's actually 50% below its all-time high. You could see that in the federal funds rate that was sitting at 0, in which we're actually at the end of a hiking cycle, which is like what we had at this retracement, the end of a pausing period, of an end of a hiking cycle. And how different those elements are. And so like when we look to this and we look to this, you say, hey, well, if we're gonna compare this to 2020, if we're gonna compare this to 2016, do all these conditions match these? No. Do all of these conditions match 2016? Yes. It was the exact same thing. All of this going on right here was the exact same thing going on in 2016. So we have very consistent macro backdrops that happened between 2020 and 2016 that are very different than from over here in 2024. And all the macro backdrops that are happening over here are consistent with the macro backdrops that were happening right in here. And the percentage rises of both of these, while this one does make it to a 618 to 702 retracement, this one makes it a little bit higher. Percentage-wise, they're actually identical in here. Again, I'm hoping it's wrong, but I got to point it out to you. By all means, it would be way more beneficial for me to come on here and just be making Moon Boy videos, and it would be glorious. But you see all these things, and so when I come on here expressing stuff and being like, something doesn't smell right, man. It's all that, right? It's all these different things. The one thing that is different that is going on macro-wise in the backdrop is a tech bubble. And fingers crossed, the tech bubble keeps going, right? So that's the thing to consider, right? So that was a 35-minute monologue to just kind of show you all these different things that are happening in here. So obviously, and again, one of those things we're all looking for here is to say, hey, are the alts going to take off from right here? I sure hope so. But the alt dominance also has behaved different in here, whereas the alt dominance collapses in this rise, right? And it's not to say it won't, right? It's performed very well. It's not to say it won't, but it's to say the modeling we're all looking at in 2020 and in 2016, all the economic backdrops are different. And even the price behavior of the altcoin market didn't do the same thing. It didn't do the same thing as 2015 and 16 either, where Bitcoin rallies from here all the way back to the all-time high and others drops the whole time. That's what everybody was looking for the last 6 months, and it just didn't happen, right? That's what everybody was looking for here on the rally back to the high in 2020, right? That's what we're looking for now. It didn't happen. And that's what everybody's looking for on this rally, and it didn't happen. Right. So there's just that macro backdrop too. And so like just for me, it's just like constantly being on my toes, thinking to myself, all right, something shows up. Like if we see the things that I'm looking for and they show up early, like that, I'll just be expressing it. Like if we get breaks happening here in the altcoin market, like if Bitcoin starts behaving very different and it's retracing And then there's this, and this total 2 goes like that during a moment like that. It'll be like, look, I think everybody's looking to the past models that aren't working, and the altcoin market is actually acting very differently, and it's acting in line with something like that, but it's happening here, right? And so that's the whole things that I'm looking at. And so like, I'm still in my altcoins. I'm not tripping out yet and like freaking out on what to do at this point. But it's that, on here, when I come on here, I'm thinking to myself, look, there's a lot of things that are like not saying we start full cycle. The one macro element it has in the backdrop is the tech bubble going on. But when it comes to all the other elements, they're all identical to actually just a glorified retrace. And even the structures in here and the percentages in here are all the exact same. So food for thought. Again, if you're new to the channel or something like that, whether times are incredibly in the depths of despair or whether they are euphoric, I have a tendency to be pretty lackluster in regards to like emotional excitement or depression when it comes on the channel. Things are way down. Oh, okay, that sucks, but I guess I'm gonna buy it. Things are way up. It's like, oh, okay, that's great. So what do we do here? Do we sell it? And in the meantime, the crowd is typically all holding hands and singing Kumbaya, screaming, we're 10xing from here, or the crowd is screaming, we're going way, way, way lower. Again, I tend to filter all that out and just kind of look over here at what's going on the actual charts. Again, reiterating, with the altcoin market, with Bitcoin, you actually are at the exact same locations for 2016 and for 2020. So those modelings, they're not broken yet when it comes to any of that, right? So looking at that from that perspective, okay. But to not forget, everything in the backdrop is different. Everything in the backdrop is different, and the dominance of the altcoins was very different. And it's going to be very difficult to pick and choose at this stage with how they have performed, and if it's going to matter about development only, right? In 2021, only 22% of altcoins set a new all-time high, and 22%. It was 17 out of the top 100, and most of them coming from very specific data. And the developer activity coins perform 3 times better than the top 20 by market cap. So things to focus on, things to research, things to look at. But then again, at the same time, you've got this whole macro backdrop going on back in here. So anyway, that was a long ramble. Holy cow, we're at 47 minutes. I haven't even touched the chat. So I'm gonna go through chat a little bit faster today, but looks like it's pretty tame out there. So that it works. It'll save us some time. But there you go, guys. I hope you enjoyed that. And like this is all just to show you what's going on. And I get it. It's a different narrative than what you see everywhere else out there. But being aware of the data at the exact same time, right? Whether you believe in it, whether you don't believe in it, it should at least be fascinating to say to yourself, wow, all those elements are very different. And they are very similar to one particular moment in time, which was a retracement that was 342%, which this is 347. So, just kind of staying on the toes at the exact same time through all of this. Again, I'm not cheering for it. Go, let us go, or let us goat, right? But don't, we're looking at that. We're keeping our eyes on that. So, okay, that is enough. That is enough serious talk for today. Back to the fun silliness.
It is Wednesday, my It is Wednesday,
There it is. No more. Now we hop into the chat. We'll have some fun, and then we'll get on our way and enjoy our Wednesday. Congrats. You are halfway through the week. Then comes the weekend. All right, Block Fella, my man, been a little while. What's up, dude? I hope all is great. You the GOAT. I believe your macro markets perception is absolutely correct. My idea is on my next post. Based on Bitcoin macro Elliott wave count, we just completed wave 1 from 2008 to 2000. Okay, so based on Bitcoin, the macro, we just completed wave 1 from 2008 to November of 2021, 5 waves up, 3 super cycles accounting for waves 1, 3, and 5. Now we are likely doing a macro wave 2 as an expanding flat correction, wave A, with 3 waves down, ABC from 69 back to 15. Wave B with 3 waves up from 15 to a new all-time high. Wave B going to above the origin of wave A, common fib extension of the 1.236 at 81 invalidates above the 1.618 fib at 101K. After this wave B is completed, 5 waves down to complete the macro wave C below wave A, a common fib extension of C as wave A with a 1.1618 extension at 7K. And so what he's saying is, boop, up to 81, expanding flat, and then we head all the way back down here. You imagine the distrust in Bitcoin in a scenario like that? I mean, I'm not disagreeing with you, but could you imagine after that? Could you imagine? Essentially, what he's saying is A, B, C. Right, kind of like you have like something like this, right? Oops. What am I doing? A, B, C, which is like what we saw for Ethereum, right? So it's kind of like looking at it from this lens. So what he's saying about 1.61 for a pull down. Wait, you said 1 point. Typically, they don't go all the way down to 1.618 fibs to the downside. So like what he's saying is this. You typically go to the halfway point between the two, rather than heading all the way. I don't even know where all that. That might take you to 0, bro, on Bitcoin. I don't. You might have that one misguided. It's like 1.2 something. But essentially, this is like an expanded flat, right? Correction happening in here, and that's what he's saying for here. For Bitcoin, big fat flat, but higher, 81 to 7. Yeah, I mean the macro backdrop is the thing, right? Like, and that's another thing too about the recoveries of all of these things too. We've talked about this a lot with BLX. That typically when you have your new recoveries, not typically, in all of them, right? We end up having the back tests of supports, the back tests of supports, the back test, all of them. We have the back tests of supports, except back here in 2019, where we break and then we just aren't back testing any of the supports. And finally, we do come back all the way to hit it, right? We do a good job back testing supports in here, but then suddenly we just stop doing it, right? The back tests of supports just come to a complete halt in here at this point. So another thing to kind of say, hey, look, you're looking at recoveries of the past where all the back tests of supports, they haven't happened. But again, you know, this just once again reiterates the point to me to even be able to do that prior to the block reward halving. And what are we at? 80 something days after the Dow Jones goes into a new all-time high. The argument lives on, right? The argument lives on, but I think the block reward halving gets smashed. The only thing is narratives. People love to hold on to the narrative, so the narrative will be it's due to ETFs, though, that overrode the block reward halving. But it also occurs, 80 something days after the Dow, again, and the NASDAQ. And to say it's an isolated event when this is the NASDAQ bottoms when Bitcoin bottoms, the NASDAQ rallies, Bitcoin rallies, are all just in unison with each other, right? So, Blockfella, brother, I appreciate it, man. It was generous of you. Thank you, sir. Andy Philpott gifted 5 BCB memberships. And then Blockfella coming out of the gates again, man, with gifting 5 as well. Thank you guys very, very much. What do you call a liquidated frog, says Jack04. What do you call a liquidated frog? Baroki? I don't get it, bro. Boroki. I got it. Daniel814. Bitcoin monthly RSI is at 702. Rejection ahead. I don't really do. RSI doesn't typically work like that. RSI levels, you have oversold and you have overbought conditions, and then you have typically just like certain areas and levels to be able to maintain, remain in a bull market or to be rejected in a bear market, right? So like on the monthly time frame, even the monthly, right? This isn't flashing the horror, right? Like the horror did back over here, right? Typically that 60 area is going to be the rejection zone. We talked all about this during the bear, holding the 40. The 40 is the area to be able to hold. And we went through all of that, you guys remember, and being like, oh God, we got to stay here. We got to stay here. We got to stay here. This thing started rampaging out of here. And it was like, look, every time we rampage out of here, bottoms in, bottoms in, bottoms in. And so even being up in here, right? And that's a 74. Or I'm getting, maybe you're measuring here. I do not do fibs on RSI. But yeah, I mean, it's not like it's in a zone that is like, hey, you're in a bear. It's not like that. It's not like that even from back in here, right? We aren't able to go sustainably higher. You get stuck in those mid 60s and then come right back down again, right? So you got that going for you too, right? And that's the thing about it, right? The technicals on all of this stuff are phenomenal. Right, look at like the total altcoin market cap. The technicals are just absolutely phenomenal in the monthly time frame. We've been talking about this all year long, right? When we're coming out of here, when we're zooming up, we're zooming up, we're zooming up, we're zooming up. The thing is whether you get the exit velocity from once you get back, right? We always anticipated to be able to get back. The question is, can you actually get the real escape to happen in here? And that's where we're at right now. And so the crowd is chanting, and I'm cheering for everybody to make $1 bajillion in here. But this has been what we've gone through throughout 2023 is just going through our Wyckoff accumulation schematics in here to try to get our way out. We now have entered phase E. Now the $1 million question is, after doing phase E, can we get the exit velocity? And so then we look around everywhere to say, do we have the conditions aligning? Right. If we see gold just get smacked down, and then if you see the Russell and expansion happen throughout the United States stock market, then hip, hip, hooray, let us all go. That's wonderful. The big thing that we can't fix, regardless of it all, is the fact that that Fed funds rate sits at 5.25. And when those Fed cuts start coming, that's not bullish. What's bullish is being at zero bound and loose financial conditions. But that actual moment of unwinding of the rates, there's no precedent for us to go back on in the last decade to look at that moment of the cuts happening and it being bullish. It has consistently been Goblin Town. So I don't want that. But the one thing that could be beneficial is if the Fed comes out and says, we're not cutting rates for 6 months because everything is just, there's no point in cutting. The economy is still roaring. Everything is good. We're not cutting for 6 months. Then we'll come back and look at it. And then if gold gets smacked down on that, and then if the Russell breaks out from that, then we have the environment we would like, that the rates just stay flat, Russell's breaking, and expansion is happening, and gold is getting decimated. Those would be very, very positive things. And I know people don't think of it that way, that they're all cheering for the rate cuts to happen. But historical basis suggests that if we actually just stay paused, that's the best thing we could cheer for. That would be wonderful, and that the economy just kind of continues chugging along. Ben, tell me the exact targets for my crap coin. Thanks. Remember that guy yesterday? He's like, hey, please give me 3 coins that I can get rich on in the next 3 days. Thanks. It's like, what? All right, Chris Merrill, can you explain the mechanics of a liquidation event like we saw yesterday? The role of market makers, margin calls, taking out stops, etc. Right. So there's a ton of liquidity that sat right above the highs. Right. So a lot of people shorting the market for Bitcoin would have had their shorts closed. Right. So whenever price tips back up above the top of there, the shorts will get closed. And so when shorts get closed, what does it mean? That means they have to buy Bitcoin. So anybody shorting, their stop loss was likely right above the all-time high. That's why we only spent 50 seconds up in there, right? This isn't enough to actually be something of where there was really buying pressure that took place in here. This little wick right here, that's all automatic triggering of stops happening in there, which when shorts are getting liquidated, what are they having to do? They're having to buy back all the Bitcoin that are happening in there. So how many people had those shorts there? or had those short closings happening in there. So let's go put liquidations. And that's what we'll see here, is that it was not just, hold on, it's just going to take a minute to load. There we go. But it was over 24 hours ago, so that stinks. So, right, was that over 24? It was over 24 hours ago, so it's not going to show up on my thing, on my screen. So total liquidations. Right, so there's two things that happen. One, it's that they're going to end up closing, right? So they're going to have their stop losses that get set right here, that they're going to buy their Bitcoin back. So essentially, what you're doing is you're selling it, right? You're borrowing it to sell it. And you sell it, and then if price rises too high, you have a stop loss set to where you'll buy the Bitcoin back and return it in here. And so that's what happened. All those were set above the all-time high. So we go up in here, and this isn't a bunch of buying that's happening in here. This is a bunch of buying that is happening by the shorts. And that's why it's so brief. It's automatic, right? It's 20 seconds up, 30 seconds down, and then boom, back down, and we go. So there's no real buying that happens here. It's all just automatic triggering happening by people who have their stops set and liquidations that end up taking place in here. But what ends up happening, so the question was what does it mean when a liquidation is happening? Can you explain the mechanics of a liquidation event that we saw yesterday? Let's pretend that you have $100, and you want to buy Doge, but you're not satisfied with Doge going up 30% a day. You want it to go up 150% a day. So you buy it on 5x leverage, right? Right. So what happens here is you get 5 times the amount of Doge for your $100. And of course, this doesn't take into account funding rates. We're just going to do simplicity's sake in here. You get you can use $100 and you get 5 times the amount of Doge. So you actually end up getting $500 worth of Doge, right? If you buy on 5x leverage. And so pretty much every 1% that Doge gets up, you're actually making 5%. But every negative 1% that Doge goes, you are actually losing 5%. So you've pretty much just added extreme volatility to it. So what happens when this thing goes negative 20? Boom, liquidation, game over, right? Or in circumstances, if you have other collateral sitting in your account and it just keeps going and going and going, then the exchange will automatically close out the position and liquidate your entire other part of your cryptocurrency portfolio. So if Bitcoin is crumbling, you could see the altcoins get absolutely slaughtered. The same thing can happen in extreme moves to the upside too. A lot of times people will say to themselves, why is Bitcoin going up so aggressively, but the altcoins are getting hammered in this situation? And it's because a lot of short sellers are actually getting liquidated during that moment. And in order to cover their portfolio, all of the altcoins have to get sold off for the margin calls that are happening throughout the market because they took on too much leverage. The price went the wrong way too far, and their whole account has to get liquidated at the exact same time. So what we saw yesterday is the price move way too far, way too fast, and eventually hit a breaking point where the market margin called. And like I posted over there yesterday, I said, we hit $1 billion. I posted this on Twitter, $1 billion is at the levels of what we saw back on August 18th of last year and at the levels of the FTX collapse. So when those events happened and we saw that level of liquidations occur, the market tends to chill out at that point. That's the most extreme selling you can get. The buyers the selling was so strong, so aggressive, so automatic. It's not are there people who panic, sold the bottom? Sure. But the majority of the selling is just liquidation of portfolios happening all at one time. It's super aggressive, automatic, tons of volume, tons of stuff going on at the same time. And that's the floor. That's as much as that extreme, massive selling pressure that was even automatic was capable of doing. And typically when you get through that event and boom, the liquidation happens, things settle down. And that's what I posted over there on Twitter. Typically once we get through that, once that event has occurred, and then you look at it and you say, was it big enough, right? we have just in the last 2 years to comparisons to look at of extreme liquidation events are August 18th of last year and FTX. And it rivaled those of what we saw in that moment. And so, what do things do? They settle down and calm down afterwards. And it gives a really curious idea on the base of a floor. If prices were able to hold where they held yesterday with that extreme level of selling that took place in there, which many of them weren't even people just panic selling, but liquidations of portfolios like we talked about, usually a pretty good sign on a floor building at that spot. And it's going to be very difficult to go lower than that because that was the extremity that happened right there. So, yeah. PTW is always on top of it. She just told me that I missed one. But I'm actually on the one prior to that. I'm still on Chris Merrill. Garlic Brad is next. But Garlic Brad, she was looking out for you. Garlic Brad, I love your markets in the morning. I just finished moving to Alaska. They have lots of weird rules. There's one where you cannot breed eels and eagles. And I'm 100% eagle. Oh boy. Thank you, sir. Member for 1 month. Chris and Akumal, hey, LBCBO, I'd like to give a shout out to my Investa buddy, JBA. He's been on this crypto journey with me since the early days, and he's lurking. Cheers, dude, and to all the Invest buddies. Chris, thank you very much. JBA, you're a lurker in the background, brother. But thanks for watching, dude. Dokansky says, where does a penguin keep his crypto? In a cold wallet. But thank you very much. From a man who goes to Antarctica. That's right up your alley, right? Chris and Akamal gifted a BCB membership. Thank you very much. Gator gifted 5 BCB memberships. Gator, thank you guys. Appreciate it. Zeta, hey BCB, longtime daily lurker here. Do you think gold could be in Wyckoff distribution starting with buying climax in August of 2020, or is that just hopium? Yeah, I mean, when you look at the correlate, we're not going to go too deep into it because this is already long, and there's a chance I can keep this thing close to an hour at this point. We've talked about that a lot in the past, just at the height at which gold is. When you look at the 90-year bubble that's been printed over there in the Dow Jones Industrial Average, and you look at the long bubble of gold, which of course isn't as long because the price was fixed for such a long time. It's a give and take, right? One goes into a bull market, one goes into a bear market. One goes into a bull market, one goes into a bear market, and they go back and forth and back and forth. And what we don't know, what we don't have data on, is to know what exactly happened to gold in that actual event, because gold's price was fixed. And then, over here, the Gold Act, right? They're like, give us all your gold. And people had to hand over their gold, but the price stays fixed, and they reprice it to $33 in the Great Depression, right? And so in an event like that, what would occur? People are probably going to hoard it, right? Just out of fear. But we don't know exactly how it would do in that moment. Right? During a cut, during cutting cycles, we know that gold does well during cuts, which is the opposite for the equity markets. The equity markets and the crypto markets tend to do poor during a cutting phase, but gold does well during a cutting phase. But when do equity markets start doing better? They start doing better after the cuts are finished, after they're at the zero bounds, loose financial conditions, everything is good to go. But there's that event horizon that equity markets and crypto have to go through before that's done. So when everybody says cuts are bullish, it's like, nah, cuts aren't bullish. That zero bound, loose financial conditions part is bullish, but that part that goes from where we're at right now to that section, that's a real sketchy moment in between. So with gold, you're asking about Wyckoff distribution. I would have thought it would already happen, that if you would have had that. And crazy as it is, what I actually see here potentially is double tap at the highs, bull flag, go. And I hope that's wrong. Because it's not a pretty sight for what comes next. Again, I own a lot of gold as a hedge. It's a position that I've had because I've recognized this inverse relationship, and that if one asset class is going to get decimated, then I need to have something of another one that tends to do well during that type of decimation, and gold tends to be it. And with the things that you see here, sure look awfully similar to what happens in breakouts. Right. Right. And so like one thing that you would have thought, right, in distribution, right, like, and then we're going to move on, like how similar this was to actually Bitcoin's top back in 2020, right? Like imagining Bitcoin, like here's us roaring, like the moment we're talking about, we break through the all-time high. Here we go. We're roaring. Elon Musk is like, yeah, we bought Tesla, and Wall Street Bets is coming in. Yeah, yeah. Oh, wait, hold on. Alt season, crazy. And then boom, the summer of torture that ends up happening in there. It's never coming back. We're totally doomed. It's never coming back. And then Kathy Wood, Jack Dorsey, and Elon Musk have a Twitter space, and oh, there we go. And it goes up, and Bitcoin goes up and hits the high, hits it again, and then it comes down. That's the moment you would have thought it would have kept going. That's where you would have thought if it was done, if it was dead, it would have kept going. But instead, here we are again. So I'm not convinced that it is, but I see what you're saying, for sure. And I won't sit here and say you're wrong, just because of where it's at still. It hasn't confirmed big breakout yet. Mark Schneider says, on my X feed, it seems like everybody and their mom is expecting an alt season. Do you think that could be a warning sign? Do you experience the same? Typically in moments like this, you're going to see big moves happen in the altcoin market because there's a lot of money that has flooded in now. And now that money wants to chase yield. And it's a lot of new money and a lot of new personalities that came in, right? So like a lot of the personalities that have entered into the market right now are going to be those ones that were not the patient ones that went through the hard times, right? They're kind of I'm here for the quick gains. I'm here for the quick fun. And so they're willing to jump around with their money and chase and hop all over the place. So, when you have Bitcoin this high, you have lots of holders that are in profit. They start doing the math and they say, the profit potential is a lot less. So they have all the profits. They can start rotating them around and playing with them. And then at the same time, lots of new entrants coming into the market who are actually looking for that type of behavior. So you do have a lot of elements for like alt season to happen. Again, to remember, in 2021, it was very isolated. It was only 22% of coins that even touched an all-time high. But do you have the actual elements there? I think you have all of the elements there. The question is, will it play out differently than 2020 and 2016? And that's an argument that I don't think is answered due to all the different things that are happening in there. And I think it would be a big trick and a big confusion to people if it doesn't play out exactly like that. Do I cheer for it to be 2020 or 2016? Of course, man. Like foaming at the lips. I mean, we're talking like if that happened in 3 months from right now, like it'd be unreal. It'd be unreal in 3 months from right now. But there's just not like the things don't match that. Everything in the back end doesn't match that. And so that's why we have to look at things from a different manner and be like, there's a trick. There's a trick. There's a trap. And to always remember, this is an important thing to always remember. At the bottoms, the crowd is always wrong-footed. At the tops, the crowd is always wrong-footed. The crowd will always be screaming for more at the bottom, and the crowd will always be screaming for more at the top. And that will always be the general consensus. And the most difficult thing to do is to go against the crowd. But when the time comes, that's usually what has to happen. Whether it's buying the bottoms or it's selling the tops, all your friends, all your buddies, all your everybody, you guys aren't going to hold hands and say, let's all sell together today and everybody sells the top. It's just not how it works. It works with selling the top while everybody else is screaming it's going higher. It's just the reality of it. Tops are not marked by everybody being bearish together. Tops are marked by everybody screaming it's going higher together. But there's a lot of positive things, and we have new people coming in, right? It's not like the same money washing around in a washing machine, right? There's a lot of money pouring into the market. There's a lot of people pouring into the market right now. And a lot of people, and the people that are pouring into the market are not the type of people who are here for the long term. They're the type of people here who are ready to chase everything left and right. And that's what it alt season is. This to that, to this to that, all over the place, right? One is going, well, the other one is sad. Then the other one goes, and that one's sad. Then that one goes, and that one's sad. Those are the kind of things that end up happening here. I think we have the conditions for it. All right, I'm going to move a little bit faster. Thank you, Mark. I want to get to the end here. We're already over an hour. PJ, if there was a BCB Fear and Greed Index, where would it be sitting? Thanks for all you do. Mine's the polar opposite, right? I'm always more scared when prices are up. I'm way more bullish when prices are down, which, we just went through a year and a half of prices being down, coming on here, making bullish content, showing the stuff, right? When we have this. But when prices get higher, of course, my concerns come out. That the whole thing of be fearful when others are greedy and be greedy when others are fearful. There's truth to that, right? But then there's that mix in between at the exact same time, right? If something significantly emerges that is like super clear to say, scream, run, 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 I'll do it, right? And I do also anticipate that moment will be marked by the crowd saying, no. But I don't know. I'd put it at neutral. Pretty neutral with concern of macro backdrop, right? I think the thing that would get me into more greed, would get me more greedy, is if we did actually see the elements start to play out with the dynamic of Bitcoin and the altcoin market. If Bitcoin did get into the all-time high, and then the altcoin markets did clear all of these retraces and really actually start looking like it, like that we've gotten beyond this critical spot, but that we've gotten into actual expansion. If that happened, you'd see me get into more greed. You'd see me get more excited and all that. But when we're here, all those things still just like, hey, like it feels like there's this trick out here, and trying to figure out when does the trick make itself present, and is there something that needs, like, is there an action that I have to take on my own portfolio in that trick if it's occurring, right? Kind of just being mindful of it and watching it at all times. To be blindsided and to only view it from one lens and to say it's only going to be bull from here. I would love to do that. And I really would do that if gold was breaking down and if we were seeing expansion in the United States stock market and breadth opening up. And if the Fed's rates were already low or something, and Fed, I could go either way as long as we stayed paused. As long as we aren't in like a cutting cycle and we're just staying paused, I can kind of remain a little indifferent on that. But if the cuts start, that just hasn't historically been good. But like if gold started crumbling and the Russell started expanding, like then you'd start seeing maybe like, let's go, let us all go. But right now it's kind of like you see all those elements. You like gold teetering on the breakout, Russell like nowhere near. We're going to get inflation data next Tuesday, by the way, on March 12th. And that's going to really be probably the bottom of CPI. From then on out, we're probably going to see CPI rise for the next year. And the question is, will the Fed do anything about that? Who knows? They may say, it looks like inflation's returning and we're not going to be cutting rates. And that would be like, oh, dude, okay, you've got my attention. And to remember that cuts have not been good. The actual cutting phase has never, in the last 2 decades, not been good. Okay. This might be the blow off top for everything before S hits the fan, says Bread Garlic House. Potentially. Thank you, brother. JJ Jacob, Casper spiked in dev activity, not top 25. But still, I noticed that. I was going through it yesterday. I saw it like number 45. I was like, hey, dude, I haven't seen you here. I noticed that too. Thank you very much, JJ. Daniel Oberlander, I haven't heard you mention that most people aren't buying houses with their money and still want to buy assets, crypto and stocks. This is what's different. I haven't heard you mention that most people aren't buying houses with their money and they still want to buy assets, which equals stocks and crypto. I don't know. That's a kind of a narrative though, right? Like, I mean, that's what the kind of, do you have proof of that? Right? People have houses, right? People live in places. Savings are low, right? And that was something that was very different in that moment too, right? We were all getting bazookas of stimulus checks at us and all that kind of stuff too during that last environment as well, which we don't have now. And savings have been depleted. So we'll see. Blockout Hills, what about decoupling narrative? Yesterday, stonks down, Bitcoin up. Today, stonks up. No, Bitcoin got wrecked yesterday. What are you talking about? What are you talking about? We liquidated $1.15 billion. And today, stocks are up in Bitcoin. What? Blackout Hill says, what about a decoupling narrative? Yesterday, stocks were down and Bitcoin was up. Today, stocks are up and Bitcoin is down. No, Bitcoin liquidated yesterday, and Bitcoin's up today. And stocks were down yesterday, and stocks are up today. I don't know, bro. Again, when you're looking at it on the day-to-day, you have to look bigger than that. I hope you have realized that at this point. You will find many. And first of all, that was wrong. Stocks were down yesterday, and Bitcoin was down yesterday, and stocks are up, and Bitcoin is up today. Right? So that the decoupling narrative of two data points of days there just kind of got utterly smashed right there and incorrect. But also, in the end, it is day-to-day action in stocks and in Bitcoin. They don't tend to behave within day-to-day. It's in big, huge environments. Like, for example, like if we overlay this, like RTY, the Russell, right? Like you could see, are these matched day to day? No. Does our 2018 bottom of the market come in near the bottom of the Russell, right? The Russell falls from 1738 all the way down to 1264. That's massive, right? That's a 28% crash in the United States stock market, in the Russell. And do we bottom on the same day? No, we bottom days ahead, right? So it's just more of like the environment, right? So if you are minuscule on a day-to-day, look at that, no day-to-day action, right? Look over here, right? Are we more day-to-day here? Yeah. Are we more, or do we delayed here? Yeah. But was it expanding? Yeah. Actually, I don't think it was delayed here. It's just the location, right? There's the top of the Russell. There's the top of Bitcoin. Oh, yeah, it is a little bit, right? What is that? How many days? Do I have this right? I think I do. Right? 80 days, 73 days. Oh, this is total. And I'm looking at total here. I'm not even looking at Bitcoin. Let's go to Bitcoin. All right. There's Russell break right there. Notice Bitcoin's moving up, but the actual break for Bitcoin exceeding the highs over here rather than here. So how many days? I think it's 33. Yeah, 33 days, right, for the expansion. So if you look for day to day, you're just kind of hoping for something there. You're not going to find it on day to day. You will see some days where it's day to days, especially liquidations in markets. Those tend to kind of go hand in hand. But if you're looking for the every single day to happen, you're not going to see it. And that's the reason why people do try to dismiss the stock market idea so much, is to say the correlation is not there. It's blatantly obvious it is. You just can't look on it in day to day. It's got to be month to month. What is happening in the bigger picture? And you will notice that the bottom of Bitcoin's bear markets happen when the stock market bottoms. The tops are happening when the tops are happening. The expansions in Bitcoin are happening when the expansions are happening. It's not day to day. It's the big picture. Right? Right. This was the idea from earlier, from Blockfella. And like this, right? NASDAQ. Right. It's the big picture, right? The falls, the bounces, the falls, the bounces, the falls, the bounces, the escapes. They're all on cue, right, with the stock market. But if we go down to the day-to-day, what you're actually going to see is, in this circumstance, the NASDAQ actually was leading the way here. Look at this, how much time has elapsed in here. It actually goes 28 days before Bitcoin does. It starts falling like this, and it gets down to here. I guess these are about the same, right? So they're actually right on cue, right? In here, this is what, 2 days before, 3 days before, and then we go down in here, right? The bottom happens here several days before Bitcoin does. But the collapse of Bitcoin comes in right there after FTX. And then we march our way up. And then look at this. NASDAQ goes higher. But, oh, no, Bitcoin's not following. It's decoupled. Oh, no, wait. Yes, it is. It's back in. Right. So right here, too, this was one where people were screaming the decoupling has happened. And so if you are going to be looking at it at this minuscule of a level, this is where you would scream it, right? You would say, look, we've decoupled. We've decoupled. The NASDAQ is falling and Bitcoin is rising. And if you look at it at that small of a scale, you're going to try to find that all the time. It's just not the case, right? It's the bigger picture happening in here of the correlations that are happening between these events. Just don't be sucked in by the day-to-day. Okay, I got to go way faster. I'm taking way too long. Oh, I've missed. Let me go back. Okay, there we go. Pat then gifted 5. Thank you very much, Pat. Scoria Jr., do you think that DOT and Theta can make new all-time highs? Is that only possible for newer projects, in your opinion? No, it's not only possible for newer ones. Like when we look back to 2018 through 2021, 17 of the top 100 were able to do it. As for Theta, I don't follow Theta. It doesn't show up in any of my developer activity or user activity levels data, so it's just not even on my radar to follow it. No clue. As for Polkadot, it falls in line with a lot of the data that was positive for it to be able to do it, right? So in regards to activity levels. So DOT has a lot of the conditions that were favorable for it. And when you say favorable for it, like when you look at development activity, you go from, rather than having like that 22% chance of the top 100 or out of every 10, which is what was consistent, 2 out of every 10, whether it was in the top 10 by market cap, top 20 by market cap, top 30 by market cap, it was just consistent across each group. It was 2 out of 10. That with the development activity, you went from rather than having like a 20% chance to having like a 55% chance. So it's a big jump, right? And that goes, that's what was important, right? So the odds are more favorable for something like Polkadot to be able to do it. So I own Polkadot. Gberg Crypto, new member, welcome. Thank you very much. Dave's Guy, if we are in the June 2019 scenario, then both Bitcoin and alts both topped with Bitcoin distributing and alts making a leg higher. What would you look for to change your stance in alts going into retracements right now? Right. I mean, so I guess you can kind of look at what did end up happening in there. And I think we've already even done it. We've already behaved differently this morning to kind of alleviate a little bit of that for the alts. Let's take a look. I don't want to mess this chart up. I want to use it later this week. So you can look at the behavior in here and see if there's anything different. Let's go to 4-hour time frame. So imagining that liquidation here is what pulls back down in here, right? So there's your 1, 2, 3, 4, 5, and then boom, you pull back down here below 4, right? Is that what we just saw happen here? Right? 1, 2, 3, 4, 5, below 4. Yeah. So how did the altcoin market respond there? It's going to make me be on the daily time frame. And from my recollection of looking at this, you did not catch a very decent sized bounce here for it. And I think we've already seen a bounce bigger than that already. Right. So if there's another lag to happen here in the altcoin market, it would be that the altcoin market could not reclaim that level, right, from where that peak was right in there, to not be able to reclaim that. And if we just kind of shuffle sideways for a couple of weeks for the altcoin market and it just looks exceptionally weaker, probably be a concern there, right? So let's go look at current. and already better. So that's a positive sign, right? Quick reclaim, already higher. Let's add total 3 too. Total 3, not yet, right? So that's something. So we'll keep our eyes on that too, right? Because what does total 2 include? Total 2 includes Ethereum, and then we'll keep our eyes on others. Right. So wanting to see them all be able to reclaim. That would be the most important thing. Is an element that happened in here is that there just became exceptional weakness throughout these in here. Let's do total 3. Dang. Okay, let's look at it like this. So we can do total 3 and we'll subtract the... Right. So that's a pretty good jump back up. But it would be nice to reclaim, right? And so that is what we did just see here for Ethereum right there. And then we are seeing here for Near already. We are seeing over here for Uniswap, or 0x, Stark. Yeah, but it doesn't really count because it's so brand new. Right, so looking for more of them to be able to kind of reclaim these highs to eliminate that concern over there. But the first one was total 2, and total 2 did get it, and total 2 did not do that in that environment last time. But okay, got to keep going. K-Swiss 702 Sacra says, hey, BCB, what's the historical average of time after rates get cut that things start tanking? We'll have to look at it again. I believe during the great financial crisis, it was like 45 days that the peak came in, and then in 2020, you had way more time, something like 100 and something days, I think. Michael McFarlane, with such clear Wyckoff accumulation playing out in some altcoin charts, it's hard to picture something else playing out there. Thanks for all you do, BCB. Yeah, like we're talking about. Yeah, it's been fantastic by how well it's played, right? Because we've tracked it for so long. Do I have you on the screen still? Yeah. Right. It just for it all to do what we anticipated it to do. And it's fun because you go through these moments like this for such a long time, and you deal with so much trash for so long, and then eventually you become the one to reap the rewards. And it just plays out precisely as on point. And I think we've been looking at this for over a year at this point, probably right around a year. We've been using this thing over and over and over again. Nihal, where to take profits for each altcoin we hold? Complacency for each altcoin? Could you please elaborate in detail? Thanks. Boy, that's good. That would take a long time. Right? You're going to have to figure out that's so broad. If you're like brand new to crypto and you're like, hey, today I just jumped in and I bought SHIB, it didn't really go that well. So, hey, where do I sell everything at? How do I buy everything and sell everything? You have a lot of work ahead of you. First of all, get TradingView, get CoinTrader Pro, figure out where reaction points tend to happen the most often, right? If you want to like have a historical basis to like just educate yourself, I mean, check out the videos here on bcbacker.com. I teach you how to do all the charts, all the everything, and show you how reactions happen and show you a lot of that historical behavior of the cryptocurrency market to give you an idea of these things I'm talking about here on the show. This isn't something I've learned in a day. It's stuff I've known for years. Like, everything I see is just constant sharing. Nothing is too surprising to me in this market on how things end up happening. It's because it's really just this repeat. Just right now, we have a lot of differences from the past, which is fascinating to see when it comes to altcoins really kept up with Bitcoin during that whole run. And you just see that here with Total 2, Total 3, and others. That they kept up. In 2020, this was not the case. This thing like went flat. And it's been fascinating to see it behave differently than the past. But you definitely need to have your own charts and figure those things out for yourself. Garlic Brad says, thank you, BCB, an awesome mod team and markets in the morning. Go XRP. Thank you very much. Garlic Brad, been active today, man. Wasler, do you think gold watchers are conversely worried that all markets are high and think something is not right on gold? No. See, gold is the signal, right? The breakout of gold has historically been the signal that the stock market's about to break. And I do watch lots of videos. I watch, if you guys don't know this, and I find it so appreciative that you guys do tune in. There's even 3,000 people who are watching me right now. It's just an absolute honor. I'm grateful beyond anything. And when I come on here, I don't treat this as a joke and just a way for me to come on here and just hoot and holler and scream a controversial opinion. I'm incredibly grateful that there are 3,000 people tuning in here and that there's over 250,000 subscribers to my YouTube channel. It is not a joke to me. It is not fun to come on and like be a villain character. It's not what I want to be by any means. I want to communicate the data to everybody out there. So it's very special to me. And I treat it very serious because the way I've always treated it since the beginning is that I watch YouTube as well. And when I get in bed, I have my favorite shows that I like to watch. And when those guys don't make content that day, I feel a little bit lost that day. And so every day that I come on here, I think to myself, man, I think there's like this chance that I play that role in other people's lives where they're like, this is part of their day. And if I don't show up, then their day's kind of thrown off a little bit. And so I try to treat every day like that and try to show up every day that I can. Like there's usually like, it is so unbelievably rare that I have a surprise day that I need to miss. Like if I'm having a computer problem or if some event's coming up, and I try to do my absolute best to tell you way ahead of time that I'm going to have time off, which there's going to be multiple times off in March, April, May, March, April, and May, by the way. But I treat it very serious. And so why did I go to that when we're talking about gold? That's because the things that I watch on YouTube are about gold and about silver and about coins. Like that's my hobby. That's my thing that I do at night. And the gold community, the silver community, they're all very excited and they all think there's financial troubles ahead. So no, they don't actually think that. They don't think it's right with gold. They think there's actually financial troubles ahead. Quinn Chones, is it possible the ETFs are doing something after all? Like one of the biggest possible reasons for the lack of confluence to the past? Well, no, we expected retracement. All of this is just on cue, right? So explain this. Explain why it all shows up timing like this, right? Why do we have all of this events occurring at the exact same time? We all need a narrative to associate and to grasp on and to hold on to. $1 million question is it a glorified retrace? And if you missed the first half of the video, we went and looked through a lot of stuff. If it is glorified, I'm not hoping for it to be by any means. But again, the conditions are all very similar to another time we've had something like that happen. Again, I know we all want to say 2020, 2016, by all means, send it to the moon. Let's all schedule a meeting on the beach where we're all just going to drink iced teas and hang out because my audience is 96% dudes. We're all just going to be duding it up. I hope that you bring your girlfriend or your wife or something. But, if that can be our future in 3 months, by all means, let's do it. But there are a lot of differences, right? So it's important to look at those. The narrative, though, is always the great thing to get retail to buy. YOLO top. This time is different. This is it. And that's what your question is. This time is different due to this narrative. Why does this look the same? Why is this on cue? Why have we followed it for so long? Why does it behave precisely correctly? Is it the narrative or is it the story? To swap it from one hand to another. Right. So like one other time, this time was different. It was when Elon Musk was buying Bitcoin and Tesla put it on their balance sheet. That was different. That was a moment where a major corporation, which at that time was retail investors' number one favorite stock, Tesla, back in 2021. Right now, who is the big guy? It's NVIDIA, right? So imagine NVIDIA announcing right now, we've put Bitcoin on our balance sheet. That's the equivalent of what that was in 2021. But it was the first time it had happened with a major corporation. So that time was different, right? It couldn't possibly top because Elon Musk was going on Saturday Night Live promoting cryptocurrency. Tesla's added it. This time is different, but it didn't matter. Same thing goes for the bottom, right? We slam into the lows. FTX collapses. The world has just hit the fan. I told the story about it at my church, pastor, making fun. And I've told this story too all the time. That was the bottom. I knew it at that very moment, the day that my pastor made fun of and here's how he phrased it, don't put your faith in the cryptocurrency. Just look what happened to FTX. And the whole congregation busts out laughing. Do you know how rare it is for everybody in that room to laugh? Rare. But it clicked in me. Everybody's heard about it. Everybody knows about it. And it's the exact polar opposite of what we had at the top, where everybody knew about it and everybody was buying it. Now everybody knows about it and nobody's going to buy it because it's a joke. And that means it's the bottom. And it's always like that with the narratives. And so I always have to be very, very gentle and cautious when going around with narratives and like saying this, right? At the end, what was the right move? Buy it all during the depths of despair, right? And then now let the money pour in. Let people eat up those narratives. Let them run with it. Go for it. But it's not for me. Dave's guy, BCB, you are the man. Thanks for the transparency. Dave, thank you very much. Well, we went an hour and 39 minutes, a complete and utter failure of how long this went. These have been going exceptionally long lately. I've been really wanting to keep them shorter, but I just haven't, It's been busy. You guys have been busy. There's been a lot of people in the chat. I am going to have to do better now. With only 1,800 to 2,200, which of course is still a tremendous amount of people. When we're hitting these 3s, 4s, and 5s, there's a lot more questions, a lot more stuff coming through, and I'm going to have to find a way to better manage that time because I do try to keep markets in the morning at about an hour. And the reality is I get whooped. An hour and 40 minutes is a long time to keep your mouth running, just nonstop. It's not what I want to do. I want to do it for an hour and then be able to try to create a video afterwards. So I'm going to go ahead and wrap this thing up, guys. Of course, you can check out my newsletters over here on bcbacker.com. There's a bunch of them in here if you want to learn about development activity, you want to learn about altcoins, all that kind of stuff. You want to learn about all this historical behavior I'm talking about with gold, with the stock market, with rate cuts, all that different stuff. There's tons of newsletters in here. If you subscribe, you can access all the ones from the past as well as get 2 new ones every month. They typically land around the 15th of the month and the last day of the month. Most recent one was put out there just a few days ago. And that's what we're talking about is the absence of breadth that is going on out there in the stock market. Of course, you could check out bcbacker.com in here for a bunch of videos on the historical behavior of the cryptocurrency market, teaching you how to set up your own charts and your own indicators within TradingView Pro. Otherwise, have a wonderful Wednesday.
It is Wednesday, my dude. It is Wednesday, my dude. It is Wednesday, my dude. It is Wednesday, dudes.
And on that note, we'll start wrapping this thing up. Check out the newsletter. Check out bcbacker.com. And most importantly, have an absolutely wonderful day. But on that note, that's it. Thank you so much for watching. If you could, please like this live stream and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I'm not a financial advisor, but if you ever need to pick me up or a little bit of reassurance, just remember the blockchain backers got your back. Have a good one. Annie Philpott, thanks for the memberships. All right, guys, that's it. Take care. Bye.